Hi, this is Daniel, and you are watching Unrivaled Investing. This is a no hype financial channel where we are mission focused on finding exceptional companies and unrivaled investments. Today, we are looking at JOYY. The ticker is YY. I came across JOYY as I was doing my analysis on the new IPO YALA, ticker YALA. That's not the company we're focusing on. You can watch YALA. I'll post a link below. So I already did analysis on it. I thought YALA was actually kind of interesting, especially relative to its valuation. But when I was looking at YALA, I kept on coming across this other app, which was higher ranked, much more popular, which is called BIGO. And their app BIGO is multiples the size of YALA, growing faster. And so I was like, who owns BIGO? Let's learn the story there. That led me to JOYY. The ticker is YY. And BIGO grew around 150% in the most recent quarter. And in full disclosure, I own shares in YY. But before digging in, if you're interested in finding potential multi-baggers, make sure you're a subscriber. If you like to learn and discuss, I appreciate hitting that like button. And if you want to see what I'm personally doing in my investment portfolio, exclusive content, go to unrivaledinvesting.com, click on Journey to follow my personal journey to find these multi-baggers. Also, I love it when you leave a note below in the video saying, hey, here's the next company I want you to take a look at because I think they have an unrivaled value proposition. So what is JOYY, ticker YY? It's actually a Chinese conglomerate of several different social communication apps. Let's start with YY, which is predominantly their Chinese live streaming app, which represents around 100% of their profits. And so it's live streaming content like music, dancing, talk shows, sports, outdoor activities, anime. And think about it, it's always on a super small scale for the most part. Like when I say small scale, I'm not talking about major budget productions. I'm saying most of the content are these small scale mini celebrities where it's an option for someone to become a mini celebrity where maybe at most they have a few million followers. You're talking about, an app, a platform that is attracting tens of millions monthly users, tens of millions daily users, people that are spending hours a day, or at least minutes every day, minutes of every hour, and then also an ecosystem of paying users. But we'll go into all these aspects in a minute. Right now, YY Live is about 40 million users, 4 million paying users. The question is, how sustainable is it to have a type of business model like what they have? And to understand broadly, like what is their business model? What are they doing? It's a platform. YY Live is a platform about enabling tipping and socialization or socializing. There's definitely a Truman Show aspect to this trend, especially if you're an attractive young lady where, like you can do karaoke and people will be sending you virtual gifts, virtual currency to say, wow, you're doing a great job. Or you can have a talk show where you can spin your latest take or you can show your dance moves. So there's obviously a fine line between exhibitionism and having something that's relevant, but there's definitely aspects to that. And there's parts of it here where it's like, hey, showing off. I went to this food market. This guy definitely, doesn't he remind you of Milton from Office Space? Like this is I went the red shrimp. I'm going to burn down the building. So so their business model is you provide users with tailored content and highly interactive features, meaning like you can encourage the people that are performers. That's the way they always articulate it. These are the performers, and there's no ceiling on how much you can tip. So this can become a real income for these performers. And so it's about enabling these people to discover their passions, self-realization, where it's like, hey, if you want to belt out some tunes and you think you're pretty good, maybe you can make some money with it. Maybe it'll be a side hustle for you. And there's also a social element to it. Like maybe you share it with your friends and now your friend pie just grew a bunch because people are like, wow, you're actually pretty good. This is cool sharing. So it's the idea is you start creating this social element, a sustainable model, because hey, if you're making money from this, you're going to keep going to it. So then you get the most performers get the most viewers. So you get this sort of self-reinforcing dynamic of getting the best performers on a given platform, including Milton over here. So what have their economics look like over the last few years? It's actually a beautiful business model with about 45% gross margins. That's quite attractive. It's not like pure software margins of 90%, but the large part of that is because they're passing on the virtual currency gifts as most of it or a large chunk of it is going to the performers. That's their business model, where they get a cut of the virtual currency or the virtual gifts that people are sending, whether or not, like, hey, you buy this fancy thing that's a virtual diamond or something and you send it to someone, or it costs you diamonds to buy this item that you send to someone, like this special heart, or you arrive, you get this fancy unicorn and it costs you X number of diamonds, virtual currency. Then the artist or the performer can then cash out those items. So their gross margins are lower than a pure software business because there's such a high amount that's going to pay the performers, but their operating margins as a percentage of their gross margins is going to be quite high. Like, this is nearly 50% of their gross margins, because it is a platform, and you should have at least 50% sort of operating leverage, where each new dollar gets a lot, is really high incremental profits. So you see around 20% operating margins. It is largely recurring in nature. You get the same people like, hey, this side hustle's working out, why not go again? And the people that are used to saying, like, oh yeah, this girl's really great at karaoke, I want to listen to her again. You tune in, let's say every Wednesday, and you're hearing it. So you do create this sort of sustainable relationship, and they have historically put up some attractive growth. About 30% revenue growth from 2017 to 2019. So this whole tipping, socializing, this actually seems like a sustainable business model. And in a world of fractured talent and diverse tastes, the platform that can host them all will likely win, because this is no longer the world that we had, particularly in the United States several decades ago, where you have 3 channels. This is China, and this is about saying, look, there are a lot of mini celebrities out there. This is a country with over 1 billion people. You're going to have a lot of talented people there. I love the quote, if you think you're 1 in a million and you're in China, that means there's 1,000 other people just like you. And so that's the reality here. And so there's going to be interesting talent, and there's going to be a lot of people that are interested in finding a diverse set of talent. Now, maybe the ultimate pool isn't going to be 1 billion people that want to watch a given artist, but maybe like 3 million people will want to watch, a bunch of different artists. So which platform is going to win all this sort of diverse talent? And that's, I'd say, is YY's big challenge. There is a lot of competition in the streaming wars and the short form video wars, where you have Kaishao, Douyin, Tencent Music, Momo, and Douyu. Momo seems like their most direct competitor. I got to be careful. I don't want my cat thinking that I'm calling it Momo. And then we also, there's so much demand for live streaming. There are even dedicated silos to specific verticals. So, for example, Tencent Music has separate apps just for live streaming performances versus recorded performance. So they have WeSing for the Sing Karaoke and free videoke recorder. And then there's other aspect of like video games. So you have such popular demand for video streaming and sort of showcasing what you're doing. And it's generally in these verticals of song performance, like karaoke, dance, and that there's sort of a shady element to that, which we can get into a little bit. Here below, you can see these people were having a competition, and they're using their AI to like show, oh, this guy got outvoted and they got all beat up during the competition, during their singing competition. And then like another very popular vertical is video games, where you're live streaming your games. Wow, look how awesome I am. And the competition this dynamic gets actually even worse. So not only do you have a bunch of players, you have a bunch of players that are actually looking to burn money, which makes it harder, if not impossible, to compete in an environment where players are willing to burn billions of dollars. Here's an article from TechCrunch earlier, where China's cash-burning video sector, how Kaishu lost $1 billion in 6 months, how they dramatically increased their spending on sales and marketing, but the splurge seemed to have paid off. The Lite app gained 100 million daily average users within a year. It's a game of pay to play. It's a game of pay to play, pay for marketing, get these users. The main app, Kaishu, itself, as of June, reached 302 million daily users who spent more than 85 minutes on the app per day, engrossed in watching clips and live sessions. So this is sort of trying to compete with sort of TikTok with a live sessions aspect to it. For comparison, Douyin is the TikTok. So ByteDance owns Douyin as well as TikTok, and Douyin crossed 400 million daily average users in January. So Douyin, that's like the main one. TikTok's the main short form videos. And so this is an app that's trying to compete with them, where it's about, trying to do the model of both virtual gifts as well as advertising revenue. But when you see this, and when you see a field where not only are there these verticals that are directly competing with you, but you have competitors that are willing to burn billions of dollars, what are the implications of having an unrivaled value proposition where you get the attention of millions and potentially even billions of users? And I'd argue that it gets really, really hard, that for YY, their value proposition is really rivaled. It's really challenged. And it's sort of reflected in their numbers, where they have 40 million users versus these other apps that are quickly gaining hundreds of millions of users. But maybe you sort of have a recurring business, a stable business, because these performers are used to going online, used to their stable of people that tip them. They're used to going, and the people that are used to paying, and tipping, they're used to checking in with YY. So it's very possible you sort of have a stable business. Maybe it doesn't grow dramatically. Maybe it grows slightly. Maybe it declines slightly. It's sort of hard to forecast when you don't have an unrivaled value proposition. And that's the basis of this name for the channel, is when you're unrivaled, it's a lot easier for you to sort of underwrite dramatic growth in the future. Whereas when you're rivaled, you don't know, are you growing? Are you declining in the future? And just that change, just that delta from, let's say, growth of 2% to decline of 2% has a huge impact on valuation, on terms of what psychologically people are willing to pay for your business. But that's not all about YY. Baidu is actually a rumored suitor to acquire JOYY's YY operations, but particularly their Chinese, assets, their Chinese operations, and maybe some consolidation brings peace to the sector, brings peace to the space. Particularly, here's an article from China Money Network where, they're saying, according to the news, after the merger, YY's clients will be retained, the content and technology will be provided to Baidu simultaneously, and the domestic live streaming team will be assigned to Baidu. The transaction price is between $3 billion and $4 billion. So far, neither Baidu nor YY have commented publicly. This year, live streaming has become the focus of Baidu. It launched its knowledge live streaming, but also entered e-commerce live streaming. Not long ago, Baidu also launched its aggregating short videos, live streaming, and other content to deepen its products in live and short videos. Baidu is effectively China's search engine, but it's always been a far distant online player in terms of getting market share and profitability, far distant relative to companies like Alibaba or JD or even Pinduoduo for that matter. But the valuation for the stock isn't that much relative, or the valuation for YY, I should say, very particularly, isn't that much relative to YY's historic earnings. But if you want to hear my actual take, a detailed take on this valuation and this potential transaction, keep in mind it's just rumored at this point, you'll have to become a JOYY subscriber. But YY is only part of JOYY. It's only one part of JOYY. And BIGO is another key segment, one of the largest international live streaming platforms outside of China. You can see they have Saudi Arabia, India, Vietnam, Indonesia, Iraq. And a lot of this is emphasizing localization capabilities, like tweaking the app depending on what country you're in. And it's one of the top downloaded apps that many investors have never heard of. For example, in Thailand, if you filter on Apptopia just based on social, they are number 4, number 5, right behind Facebook in terms of grossing, in terms of money that's going through this app. They're number 1. You look on Vietnam, HAGO, which is also one of YY's or JOYY's apps, that is number 2. BIGO, once again, both of these are right below Facebook. Once again, number 1 grossing. Pakistan, it's right below Facebook and Snapchat. Once again, number 1 grossing in terms of money that's going through this. Saudi Arabia, they have a video calls and chat app. So here I switched it to take a perspective on social communication. So this is a little different. But once again, BIGO Live is number 1 in terms of dollar grossing. Indonesia, number 7, number 9. These, either way, you're talking about the top app, one of the top apps of the world that a lot of people aren't aware of, that is certainly what you're seeing across these markets is number one in terms of gross dollars, in terms of, even though it's not a paid app, the amount of dollars that are going through this platform reflects that there's something certainly interesting here, especially given that it's above Facebook. So what is BIGO's business model? And it's very different than other social models, as it's about creating, that ecosystem that pays the creators. So here you can see this nice, attractive young lady. She's performing, she's singing. Some guy arrives in the room. He's driving his virtual Lamborghini. He's some hot, what, and people are figuring out, like, what type of gift do I want to send this girl? I can send this treasure box, which costs 5,000 diamonds, and she needs this many things in order to be able to initiate a private conversation. Or I could do this, and here are the things that she's winning, and she's got these stars. And the reality is, this business model of tipping and taking, not advertising, but sharing a rev share with your performers, is a radically different business model than Instagram and Facebook right now. Instagram and Facebook, that's an ad-driven model. This is let's just focus on the user experience, where you are interacting with the performer. So I'd argue completely different business model, even though they're both under the social category. Very different competition. Even though in some respects it's competing for your eyes. One is, who am I engaging with this performer? And here's some comments from management of JOYY right now, judging from the recent performance and taking into account of the latest situation across the world. We think BIGO can generate somewhere close to 100% revenue growth on a year-over-year basis for 2020. And that effort obviously is driven by the increased expansion to BIGO's market and also the existing market as well. So that's about the kind of performance guidance for BIGO for the second half and full year. 100% year-over-year growth. Keep in mind, they posted about 150% growth in the second quarter. And then in terms of competitive landscape, again, BIGO Live has achieved potential great growth in users and revenue. We think we don't see any other competitors for BIGO Live in all of the key markets that we operate. And we remain very focused on driving our revenue from the 4 key markets that BIGO Live operates. As we explained before, that includes Southeast Asia, includes Middle East, includes North America, and Western Europe. We remain very committed for the diversified original exposure. So when I hear that no one else is really competing with you head for head in this sort of business model, and keep in mind, this is a business model about creating a platform that is sustainable for performers to sort of get a side hustle. You create these mini celebrities all the way at the top. You create these spenders that are just happy to tip. And, it's like you're creating, ideally, the sustainable ecosystem that's not easily disrupted, because you have all these people, you have all these different types of talent. This is very different than China, where they're like, look, we have tons of competition that's willing to burn billions of dollars. Here it's like, ooh, wide open field, really attractive, and growing as such. Like Facebook, Instagram, they're not growing 150%. They're not growing 100%. So when you think about unrivaled value proposition, I would argue that BIGO right now is quite different in terms of the range of value proposition. Are you unrivaled versus are you commodity versus something like YY? Let's keep going. So BIGO Live's potential. Management thinks they can grow BIGO Live to 4x YY's live scale. And, they talk about particular markets, that each market has different aspects to it. So this is about understanding that you need to adapt the app per market, per country. Like they say in Indonesia, what's super popular is ghost hunting, which is a type of game. In the Middle East, they recognize that it's very similar to what I talked about in YALA, where people just pop open the app and it's just sort of about chit-chatting throughout the day. And they might leave the app open for hours. 12 hours a day was one figure that was thrown out, where some users just leave it open and it's sort of there in the background, where you just want to talk up, someone pops in, someone pops out, and you're just very casually like chit-chatting, sort of like office cooler chit chat. And then there's also like singing is super popular in Japan and South Korea. And someday I might just be an international Japanese star based on my karaoke, but I'll save that for another video. And here's a quote from management where they go, we think that overseas live streaming will have high potential or higher single unit user lifetime value than in China. There are several reasons for that. So they're talking about why do they think BIGO could have so much higher value on a per user basis than in China. The main takeaway that I'm about to sort of share is that it's just less competition. First one, overseas is what we call pan live streaming model. The entry barrier for live streaming is much lower. That's why we're seeing the participation from daily average users of BIGO Live is much higher than any other live streaming platforms in China. So the participation in terms of using the app is much higher than what they're seeing in China. That's the first thing. Secondly, the social atmosphere and behavior within the live streaming community overseas is more diverse and prevalent than in China. China, you can have it's just the Chinese market, whereas here you can have multiple different countries, supporting each other. Like you can have a video game player over here supporting, a player over here, or a performer in one country is going like, wow, that's really beautiful. Global harmony, I love it. If BIGO makes that happen, cats and dogs living together, I love it. So a lot of cases, so a lot of cases we've seen that each host, they're not eager to cash out the money they earn on the platform. They remain the money they earn within the ecosystem, and they tip each other as a way for competition and social interaction. And so that's why typically you see the average revenue per user, the paying amount per paying user in BIGO Live is much higher in China. And that is quite typical across many countries region. So we think that going forward, BIGO Live will have higher monetization potential than in China. And that's the key reason why we think it has 4x of YY Live's scale. So in short, less competition because you have less options in terms of this ecosystem for performers. More performers are likely to go on there. Because more performers go on there, you're more likely to get the people that are looking just to sort of watch live streaming and pay for it. This sort of, hey, this is cool watching this in live, watching this person, make mistakes or, perform, or maybe they do a heads up singing competition, something, and you can participate. You can throw in, a few pennies their way. You could say, oh, here's some magic beans, that are worth a few diamonds, virtual diamonds I'm going to send your way. So there really is this interesting aspect to it on a potentially global perspective, where people in one country are helping out users in another, or performer in one country is generating the interest of another. That's not all. Like the reality is, as I mentioned already, BIGO is crushing it. 40% monthly average users growth year over year, from 21 million to 29 million year over year, and then revenue growth of nearly 150%. I mean, when I think about that, and I think about what they're doing, it does make me think you're doing something special. Because if you look at the apps, the social apps that they're competing with in these countries, like one, they're not, Facebook in Vietnam isn't growing, at these rates. Facebook broadly is not growing at 40% a year. At this point, Facebook's growth is primarily from increasing their ad prices. It's not from dramatically increasing their user base. So to see 40% user growth, that's really interesting, especially from an ecosystem perspective. But there's more. And so there's also, within sort of the BIGO umbrella, there's also Likee, which is a short form video app that competes with TikTok. It's growing very quickly. Its growth is up 86% year over year, 150 million users, where it's a similar business model with live streaming, except there's advertising revenue on this one. Also, there's an e-commerce element that they're looking to roll out with this. There's even more, where they also have HAGO. That's an app that I called out a couple of times, which was launched in 2018 as part of their global expansion efforts. And it's a casual game social network. And you can sort of see, like, there's some sort of cheesy, easy games, that you're playing. You can see there's sort of dice and, like they're saying, look, there's 100+ free games for you and your friends. And the main item to take away is it's have fun and get rewarded, host a chat, or go live to receive gifts that can be cashed out. Once again, tapping into the social element, let's create an environment that attracts people. If you get enough people in a virtual room, eventually someone's going to be willing to spend money. If they're willing to spend real money because there's other people in that room, you can get a cut. That is the business model that they're just looking to repeat over and over again. Oh, you're looking to live stream? We can figure out a way to get a bunch of people in a room, watch you, make money happen. You want to play video games? Get a bunch of people in a room, show off your moves or compete against each other. There's a way to have money exchange hands, and there's a way for YY or JOYY to get a cut. And there's even more. And so they also own a large stake in HUYA, which is the #1 live streaming for video games in China. They've been selling down this stake to Tencent. I think I'm going to make a separate video about HUYA in the future. HUYA is merging with the top competitor, which is JOYY. I've covered a lot here. JOYY is effectively a Chinese conglomerate of several different social media apps. What are sort of my broad thoughts on JOYY? And JOYY is largely a bet on human nature. Do people, one, like having side hustles? Yeah. Do people like, sort of this exhibitionist? There's a little bit of voyeur aspect of like, hey, there's an attractive girl that maybe she's dancing. Now, it's not nudity. Let's be very clear, but it's not supposed to be nudity, but it can be very suggestive. And so is there this aspect where people around the world are going to be looking to have that sort of, tipping aspect to it? Will there always be video gamers that are looking to show off their things? It's a bet on human nature. Will people want to show off their where they are on the social pecking order in the future? And will they want to do it on scale? And sort of, do you think that there's a trend for global live streaming? Do you think that'll continue to grow in the future, or do you think that sort of peters out? If you think that global live streaming, international live streaming, is a trend that will continue to grow, then I'd argue JOYY is currently the #1 way to play it, especially given their unique business model, where it's about enabling the performers. So that way it becomes a win-win for the performers, for the people that tip. They get to see the performers come more often. It's a win for JOYY. But all this said, even though you might have very positive views about global live streaming, it's not without risks. So, for example, I would say political interference is actually one of the big risks here, geopolitical interference. And, here it is. You see this article from TechCrunch. India bans TikTok, dozens of other Chinese apps. The Indian government on Monday evening said, this was from a few months ago, said it was banning 59 apps developed by Chinese firms over concerns that these apps were engaging in activities that threatened national security and defense of India, which ultimately impinges upon the sovereignty and integrity of India. Part of this might be a tit for tat for border disputes, but I think there's a broader aspect to this. The New Delhi's said nation's computer emergency response team had received many representations from citizens regarding security of data and breach of privacy impacting upon public order issues. I would say the bigger issue here, and this is a legitimate blow-up risk that you should consider with the company, is, look, if you want to read the risks, you go to the filing and you read all of them. But, the risk is that if you're concerned about the Chinese Communist Party, which effectively oversees any company in China, so therefore any data that any Chinese company has can go to the Chinese Communist Party, you really do have this risk of sort of this big brother that sort of oversees everything. And so I can understand why India made this choice to shutter these apps. Now, once again, maybe part of it was a border dispute, tit for tat, or, a response to that. But part of it's also like, hey, do you really want hundreds of millions of Indians maybe tipping some dancer somewhere else or sharing some confidential information that then the Chinese Communist Party can have access to? And that is a real concern, that you will have countries go around the world and say, you know what, we need to have our own apps, or we need to make sure this data is encrypted, or we'll never trust data that's flowing through the Chinese, Communist Party. So I would argue that's a big risk when you're considering a company like this. And I would argue that's also a value proposition for any company, that while they might come across as anti, law enforcement, the reality is, if you're offering end-to-end encryption, you're talking about a much bigger opportunity that you're talking about, because you're effectively saying, hey, we're not the Chinese Communist Party. We make sure everything's super duper encrypted. So I would say geopolitical interference is definitely a big problem, potential risk on the horizon, especially if any sort of political, geopolitical conflicts start heating up. So, but the billion dollar question, when you're looking at this, and it's a multi-billion dollar question, is how much is all this worth? We talked about a bunch of different apps. We talked about different trends. Some of it's where YY is facing tougher trends and the revenue is actually declining because they're facing so much competition. They say it's COVID, but I would argue it's probably competition as well. You have access to all these different geographies. We talk about geopolitical risks. We didn't even talk about bad content. Like, what's the risk that you're a platform that's enabling, like dealing in drugs or nudity or prostitution or something like that. So that's, there's definitely aspects to this. Now, this is where, YY management would say, well, wait a second, like we've got algorithms that filter out 99.9% of this content before it even starts happening. So once it starts, then it's like, oh, we cut it off. Now, given that this is a Chinese company that's, is used to Big Brother watching and needing to be able to filter out content, like I do believe that they're probably going to be pretty darn good at filtering out content, given that that's been critical to their business model. You can't say certain things that are critical to the Chinese Communist Party in China. So they've become expert filterers or expert, gatekeepers on what content can go through. So, the question is, how good can they do it? And when you do queue up the videos, you do get the sense like some of it, a large part of it, is going to be the attractive girl just trying to get some virtual currency by any means. Any means up to a certain point, like any means up to a point where it's not prohibited on the BIGO platform. Not necessarily that she wouldn't have permitted it, but that the platform says like, you're not allowed to. And I'd say critically from an investor perspective, does this have the potential to be a multi-bagger, or is it richly priced? Is it super duper expensive? What's sort of being baked into the valuation? And to sort of understand that, you are going to have to go to unrivaledinvesting.com, click on Journey, and that's the exclusive subscriber section only, where you can see what I buy, what I sell, what I hold. I have an educational series. I aim to identify a potential multi-bagger each month. That's my goal. And, I also, like this video, where I'll put out exclusive content where you'll be able to see like, hey, here's my valuation calculator for this company. And remember, just finding one potential multi-bagger can change your life journey. So if you're interested in following my journey as I try to find these multi-baggers, go to unrivaledinvesting.com. And if you enjoyed this video, please subscribe. If you're already a subscriber, I really appreciate the thumbs up. It certainly helps the algorithm. Thank you so much for watching.